Okay, this is a 240-minute chart of the S&P 500 index using ticker symbol SPY. And as you can see, it's a really, really nice chart if you just trade the cloud. And when we have something in the portfolio, I use the cloud to manage it. If you're not familiar with the clouds yet, please go to the main page, and there are two videos that explain the cloud technique in detail. And so as you can see back here on February the 16th, the S&P 500 breaks the cloud and then just continues and continues very, very nicely above the cloud for 2 months. And then as you can see over here, it's touching the cloud again, and to be honest, I actually think there's going to be a cloud break eventually, but you never know. So this is something that I like to track. The 240-minute chart is actually a really, really nice chart to track. There would be 2 candles a day, so it's really great if you're a swing trader like we are, wanting to hold for several weeks or about 2 months or so. I also look at the daily charts, so I'm bringing that up now. This is the daily chart of the S&P 500, and this is when we were in trouble a few months ago, but it eventually did break the cloud. But on the 60-minute chart, it actually gets you in a few weeks earlier. However, you always really have to keep the daily chart in mind all the time. I always look at the daily charts for everything. The weekly charts I find to be a little bit too long sometimes, so I do prefer to look at the daily charts as my default time frame. I also want to bring up the euro because that was something that I said I would bring up, saying how this charting kept you out of going long the euro, even though there was a lot of talk about it recently. There was Mark Faber in the news, who's a famous Swiss guy, lives in China. He's been there for I think 20 years. And what I wanted to look at here was the daily chart of the euro. Way back at the end of December, it breaks the daily cloud, and it's been downhill ever since. And I show this, I think, in the first or second video on the main page. And you're always tempted to go long, but look back here. This right around here was when everyone was saying, oh, the euro is oversold, go long euro. But guess what? It touches the cloud here, and then it fails. It fails the cloud, and then it continues now below the Tenkan. And I'm not bullish on the euro at all. I mean, there would take, it would have to go above the Tenkan line again. It would have to move through the cloud over here to the right. If it did break the cloud, was above the Tenkan line, I would probably like the euro again. Okay, I also wanted to look at CYCC because that's a stock that we're holding, and it actually had a nice day on Friday when everything else was down. So the daily chart's not that great because it did have this big move a few months ago. So I prefer to look here at the 240-minute chart. And even looking here, it's not the best. I actually do manage this with the 60-minute chart, but I always look at the 240. 60-minute chart, this is how I'm managing it now. So you can see that the stop will probably be down here at about 240. You can also look at the 120. And the 120 is quite nice. The stop is still at about the same place. But talking about managing risk, and I mention that really a lot in the reports, is that I always want to manage the risk. And if you are managing something like this on the clouds, this is the 120-minute chart. So say, for example, the stop point is back here at about $2.40. So let's look at what we have here. We have a break of the cloud. It's below the Tenkan line. This is a place you don't want to be in. And you might say to yourself, you know what, the stock is still good, and I might do this in the member section as well. I might say I'll monitor, what we got stopped out on for a better time to get back in. And this goes on for approximately a month. Below the cloud, below the cloud, below the cloud, down to 210, still doesn't break the cloud until finally it does here at 240. And where are we now? We're higher. So being in here, above the cloud, above the Tenkan line, is much, much better than being here below the cloud, below the Tenkan line. And you can back test all you want, and you'll see time and time again that you're much, much better off here than you are over here. Real briefly, gold. We are now out of gold. We got stopped out, and I used the 60-minute cloud to get stopped out on. This is the 120. You can see it's pretty much the same area here, 111. There's a break of the cloud. 60-minute chart, broke over here. I wanted to get out at about 111.50 with a limit at 111. I never ever want to set a stop without a limit, because if you set a market order on the stop, you never know where you're going to get filled, and it can be dangerous. The best way actually is to set an alert for yourself, and then to just put in the order yourself. Juniper, that's a stock that we didn't buy either, and the reason was because I didn't want to get faked out by the Intel earnings. The 240 chart is really good on Juniper. It sort of coincides with the volatility of the stock. I wanted to buy here at 32.25. Didn't make it. Now we have the shooting star candle, and I'm just going to avoid Juniper for now and stick with the order that we have, which is a buy stop limit. The stop will then trigger the limit order. So right now, I don't think the market is great. People might say it's a buying opportunity. I don't believe that. When you have a lot of weakness like we had in just one day, it can lead to more weakness. And with the SEC coming out with Goldman, you know, there's a phrase in trading that there's never just one cockroach, and you know, we never know what else is going to happen here. So for now, I'm neither bullish nor bearish, more cautious. We'll hold what we have and see what comes about in the coming days.